Welcome to Informed Investor. Today, April 1st marks the beginning of the new financial year of 2025-26. While we're all buzzing with optimism, the markets have decided to start things off with a bit of wobble. Both the Nifty and Sensex dropped up to 1.5%, marking a challenging start to FY26, reflecting investor anxiety amid global uncertainties. Stay tuned till the end to know why the markets are falling. Apart from this, Vodafone Idea has made headlines as the government's decision to convert 36,950 crore of dues into equity pushes its stake in the telecom company to nearly 49%, edging it closer to a public sector status. So without any further ado, let's begin today's video. The Indian markets have experienced a steep fall today with a broad-based sell-off witnessed across sectors. Nifty Realty saw the steepest decline of over 3%, with most other sectoral indices in red. Nifty Media was the only sectoral index witnessing notable gains amid this market fall. This decline was driven by several factors. Firstly, market participants are cautious, anxious, and whatnot ahead of the reciprocal tariffs set to be announced by the US government on April 2nd. These tariffs could impact several sectors, with the most notable one felt on India's IT sector, which exports a substantial amount of IT services to the US. After a brief buying streak, foreign institutional investors have once again turned net sellers in Indian equities. Exchange data shows that FIIs offloaded stocks worth 4,352.82 crore on Friday, adding pressure to the domestic markets. This thereby makes the third straight month of FII being net sellers in Indian markets. Another factor is Goldman Sachs has raised the likelihood of a US recession to 35% from its previous estimate of 20%, citing potential economic fallout from Trump's tariffs. It is raising concerns of the US economy shrinking in the coming months. The brokerage also warned of a possible technical recession in the European Union, which could further dampen global investor sentiment. Lastly, another factor weighing on the markets is a surge on crude oil prices to a 5-week high, raising concerns over India's import bill. Higher crude prices often weigh on domestic markets given India's heavy reliance on oil imports. All in all, global cues and uncertainty around trade policies have led to a sell-off and a cautious approach by market participants, pressuring the Indian equities. Now moving on to a second story. Shares of Vodafone Idea have surged a massive 23% today as the government announced its latest lifeline, meaning it would convert Vodafone's outstanding spectrum dues into equity shares. So in a sense, the Indian government will convert 36,950 crore of outstanding spectrum auction dues into Vodafone equity. This move raises the government stake in the company from 22.6% to 48.99%, making it the single largest shareholder. On the flip side, it dramatically alters Vodafone Idea's shareholding pattern. The stakes of private promoters will consequently decrease, with Vodafone PLC's holding falling from 24.4% to 16.1%, and Aditya Birla's group stake declining from 14% to 9.4%. However, both the promoters will maintain operational control of the company. And if you remember, this marks the second time the government has converted Vodafone Idea's debt into equity. In 2023, 16,133 crore of debt was converted at the same rupees 10 per share price. While the recent conversion eases the spectrum payment obligations for FY26, Vodafone Idea still faces significant debt challenges. But generally, how is Vodafone Idea competing? Vodafone Idea has been struggling to keep pace with competitors like Reliance Jio and Bharti Airtel. The company's subscriber count has remained stagnant, with a slight increase in its 4G user base to 126 million in Q3 of FY25 from 125.6 million a year ago. Vodafone Idea is working on expanding its 4G coverage to reach 1.1 billion people by March 2025 and plans now to roll out 5G services in key cities like Mumbai and Delhi by April. This is weighing heavily on Vodafone as the customers are likely seeking to switch to providers already offering robust 5G services. Now, in terms of market share, Jio holds the highest 39.5% of the subscriber base, followed by Airtel at 32.9%, while Vodafone Idea's share has declined to 19.4%. Now, lastly, despite the equity conversion, Vodafone Idea still faces massive debt obligations with repayments of 43,000 crore annually looming from fiscal 27 onwards. Despite all these challenges, Vodafone Idea's financial results for the Q3 of FY25 showed some signs of improvement. Revenue increased by 1.7% quarter-on-quarter to 11,117 crore on the back of slight increase in its average revenue per user. Operating profit margins rose 4% to 4,712 crore, with margin expanding to 42%. When we look at the bottom line, net loss narrowed to rupees 6,609 crore from previously 7,176 crore in the previous quarter. As mentioned, average revenue per user improved to 173 rupees from rupees 166, a 4.7 increase. While these metrics show progress, they are pale compared to industry leaders like Jio and Airtel. So what do market experts think about Vodafone Idea's prospects after this government intervention? Global brokerage firm Citi Research has maintained its buy high risk rating on the stock with the target price of 12 rupees per share, suggesting a potential upside of 76% from its previous closing price. However, the firm cautioned that while the government's increased stake will help manage the financial burden, Vodafone Idea still faces major challenges in raising fresh capital and expanding its 4G and 5G networks. Additionally, among the 21 analysts tracking Vodafone Idea, 11 have sell rating, while 5 each have a buy and hold rating. Now, talking about the road ahead. Vodafone's future hinges on two things: fundraising and 5G rollout. Vodafone remains actively engaged with lenders for funding towards the execution of long-term expansion. Moreover, Vodafone has just launched its 5G in select few cities, while Jio and Airtel cover 90% of India's 5G needs. Without 5G, Vodafone risks becoming irrelevant and huge customer churn. While Vodafone has been aggressively indulging in capex-related activity to the tune of 53.3 billion for the first 9 months and expected to go up to 100 billion by the full year end, they face significant pressures from Jio and Airtel in terms of pricing, network coverage, and operational capabilities. Now, to conclude, markets are volatile with uncertainty looming around with the upcoming tariffs. Keep an eye on global cues, Fed policy, and future earnings. As for Vodafone Idea, it's a high risk, high reward bet, only for those with a strong risk appetite. What do you think? Will Vodafone turn around, or this is just delaying the inevitable? Let us know in the comments. Now, apart from this, let's look at some important market updates. With US tariffs on Chinese auto parts soaring to 37.5% to 62.5%, Indian exports facing a capped 30% levy see a chance to expand their market share. Meanwhile, India may propose a 0 to 1% tariff on US auto parts under the ongoing bilateral trade agreement talks if the US lowers its 25% duty on Indian exports. The Indian government plans to expand EV charging infrastructure across airports, highways, railways, and ports, targeting 72,300 charging stations by FY26. Under the 10,900 crore PM E-Drive scheme, 2,000 crore is allocated for charging and battery swapping stations. Key transport corridors including Delhi-Jaipur, Mumbai to Pune highways are being prioritized with up to 80% subsidy for projects. Moving on, Hindustan Aeronautics Limited jumped 7.5% after winning a 62,700 crore contract to supply 156 LCH Prachand helicopters to the Indian Army and Air Force. Deliveries start in 3 years. Despite LCA and ALH delays, HAL reported 30,400 crore FY25 revenue, reinforcing its role in India's defense self-reliance and boosting investor confidence. Goldman Sachs has raised the US recession risk to 35%, citing weak fundamentals and declining confidence. It also increased its 2025 US tariff forecast to 15%, with inflation expected to rise 3.5% and GDP growth cut to 1%. Unemployment may also hit 4.5%. Another update is BSE Limited has approved a 2:1 bonus share issue, offering 2 free shares for every 1 held by shareholders. The record date is yet to be determined, and only investors holding shares before the X date will be eligible. This is BSE's second bonus issue since its 2017 listing. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.